So you need cash, but how much can you actually get? Ever stared down a mountain of unexpected bills and felt a cold sweat roll down your spine? Maybe that leaky roof finally decided to become a waterfall, or perhaps your car decided to impersonate a disco ball with all those flashing lights on the dashboard. Whatever the reason, a personal loan can feel like a financial lifeline. But before you dive headfirst into the world of borrowing, there's one crucial question: how much can you realistically snag? Today, we're cracking open the vault on SoFi personal loans to see exactly how much cash you can potentially borrow. Now, SoFi isn't your average loan shark from a dimly lit backroom. They're an online lender with a reputation for transparency and, dare we say, even a little approachability. But with any loan, there are limits. The land of minimums and maximums, navigating SoFi's loan amounts. So, let's get down to brass tacks. SoFi offers personal loans ranging from $5,000 to a whopping $100,000. That's a pretty wide spectrum, enough to cover anything from a minor appliance meltdown to a full-blown kitchen remodel. But here's the thing, just because they offer up to $100,000 doesn't mean that's what you'll qualify for. SoFi, like most lenders, looks at your financial situation with a magnifying glass before handing over a blank check. Cracking the code, what affects how much you can borrow? So, what exactly are they looking at? Here are the key factors that influence how much SoFi might lend you. Credit score, this is the big kahuna. A sparkling credit score screams responsible borrower and unlocks the gates to loaning paradise, or at least a decent chunk of change. The lower your score, the smaller the loan you might qualify for, or you might face a higher interest rate. Income, SoFi wants to make sure you can comfortably repay the loan. The higher your income, the more you demonstrate your ability to handle a larger loan. Debt-to-income ratio, DTI. This fancy term basically means how much debt you already have compared to your income. A lower DTI shows SoFi you have more wiggle room in your budget for their loan. Employment history, steady work is a good sign. SoFi wants to see you have a reliable source of income to repay the loan. Bonus round, purpose of the loan. While not a make or break factor, SoFi might be slightly more inclined to lend for certain purposes like debt consolidation or home improvement, compared to, say, funding a weekend in Vegas, although, no judgment here. Unveiling the mystery, the loan pre-approval process. So, how do you find out your magic SoFi loan number? The good news is they offer a pre-approval process. This quick online check assesses your financial situation and gives you a sneak peek at the loan amount and interest rate you might qualify for. The best part? A pre-approval typically doesn't hurt your credit score, unlike a full-blown loan application. Be a borrowing boss. How much should you actually borrow? Just because SoFi might hand you a boatload of cash, doesn't mean you should take the entire haul. Here's the golden rule: only borrow what you absolutely need and can comfortably repay. SoFi personal loans come with fixed interest rates, so you'll know exactly how much you'll owe each month. Factor that monthly payment into your budget and make sure it doesn't sink your financial ship. The takeaway: borrow smart, not heavy. SoFi personal loans offer flexibility with a borrowing range that can tackle different financial needs. But remember, it's all about responsible borrowing. Use the pre-approval tool, calculate what you can comfortably afford to repay, and only borrow what you truly need. With that said, thanks for watching, and until next time.